Imagine discovering that your life savings have been cut in half overnight when you check your bank account or cryptocurrency wallet in the morning. Millions of Bitcoin investors are currently dealing with that painful reality. Once heralded as the future of money and a means of achieving unthinkable wealth, Bitcoin is collapsing in ways that no one could have completely anticipated. What went wrong then? Are there more powerful factors at work, or was it just bad luck? We'll explain in detail why Bitcoin is falling, why some individuals lost everything, and what you need to know if you still want to be a part of the cryptocurrency industry in this video. The final point will blow your mind, so stay to the end. Number 7, the hype bubble. More than anything else, enthusiasm drove the emergence of Bitcoin. From celebrities promoting it as the money of the future to social media posts promising instant wealth, the narrative was compelling. Before realizing they were enmeshed in a perfectly timed bubble, millions of ordinary people rushed in, believing they were making a wise investment. The excitement caused prices to soar well above the real applications or uptake of Bitcoin. Not because they understood the technology or thought it would be valuable in the long run, but simply because everyone else was buying, people were purchasing at peak prices. Furthermore, the more it expands, the more disastrous the crash will be when it bursts. Just like any other bubble, those who made purchases in the midst of the frenzy ended up with assets that depreciated rapidly, often overnight. Many people are still having financial difficulties today. Number 6, regulatory crackdown. The world's governments have begun to crack down on cryptocurrency trading, which has caused investor confidence to drop. While some nations have completely outlawed cryptocurrency trade, others have imposed stringent laws, high taxes, or mandatory reporting. Panic erupts in the market whenever a government announcement is made. When investors sell in a hurry, it sets off a chain reaction that lowers the price even more. Bitcoin is not safeguarded or guaranteed. Unlike conventional bank accounts, there is no safety net in place in the event that the market crashes. Regulatory news can be the difference between utter loss and financial security for regular investors. Bitcoin is a risky gamble for anyone depending on it as a reliable investment because of the continuous struggle between governments and the cryptocurrency sector. Number 5, exchange failures and scams. The platforms you use to hold Bitcoin are one of the main risks when investing in it, not the market itself. The majority of people store their Bitcoin on exchanges rather than actually owning it. Exchanges are also susceptible. They may be compromised, improperly run, or even function as frauds. Consider Mt. Gox, where more than $450 million worth of Bitcoin disappeared in a single day. Or FTX, whose demise instantly cost investors billions of dollars. Bitcoin disappeared into thin air, leaving those who believed it was safe with no way to get it back. This was a devastating loss for many, not simply a monetary one. When an exchange fails, it doesn't just hurt one person, it destroys trust in the entire market, leaving thousands scrambling for answers and desperate to recover what's gone. Number 4, market manipulation. Due to its lack of regulation, Bitcoin serves as a playground for investors known as whales, who own vast quantities of cryptocurrency. By engaging in large trades or disseminating untrue rumors to incite panic selling, these whales can influence the market. The Bitcoin market is essentially free for all, in contrast to established markets that have regulations and control. Prices can drop dramatically in a matter of minutes if one whale sells a sizable portion of Bitcoin. It's like getting struck by an unexpected wave for small investors. Pure speculation can cause the market to fluctuate violently. Anyone who is not paying attention or panics at the wrong time could lose everything in an instant. It serves as a harsh reminder that the largest participants in the cryptocurrency space frequently wield the true power, leaving regular investors at the mercy of the industry titans. Number 3, global economic factors. Contrary to popular belief, Bitcoin is not immune to conventional market pressures. Global economic factors, like inflation, interest rate fluctuations, wars, and political unpredictability, all have a significant impact on Bitcoin. Investors frequently panic sell their Bitcoin to offset losses elsewhere when stock markets decline, which further depresses the price. Massive movements can result from even minor news, such as a central bank decision. As people value stability and liquidity above speculative assets like Bitcoin during uncertain economic times. Despite being touted as digital gold, this creates a perfect storm where Bitcoin can become exceedingly dangerous in ways that no investor can fully predict. Number 2, emotional trading and FOMO. The degree to which human emotion influences decisions is arguably the most brutal feature of Bitcoin investing. Fear of missing out causes people to buy at the peak, and panic causes them to sell at the bottom. For regular investors, this emotional trading magnifies losses and transforms erratic swings into disastrous crashes. Many people respond impulsively rather than strategically, and Bitcoin might swing by 10% or more in a single day. Even experienced traders are susceptible to the vicious cycle of fear and greed, which can lead to blunders that exacerbate losses. The fact is that in the world of cryptocurrency, your personal mentality can be just as risky as, or even more so, than market forces or scams. Number 1, could Bitcoin recover? Some analysts continue to believe that Bitcoin has a bright future in spite of all this turmoil. Although recovery is possible, it is not assured. History suggests that Bitcoin can recover, but it also illustrates that these recoveries can take years, and many early investors never see their money be returned. Risk management is the most important lesson. Never make larger investments than you can afford to lose. Although Bitcoin might increase once more, it is quite risky to depend on it as your money lifeline. The only means of survival for those who are still holding are caution, strategy, and patience. And even then, nothing is certain. So, is this a sign of something far more serious, or did Bitcoin just crash? Anything can happen in the world of crypto, that much is clear. Hit the like button, subscribe, and enable notifications if you want more startling cryptocurrency stories, advice from people who lost everything, and insider information you won't find anywhere else. You don't want to miss it. The next story will blow your head even more.